bringing it into Financial Focus, the program with John Kuykendall, founder, CEO of GulfCoast Financial Services, who, of course, have been named Best of the Best 10 years straight and running in financial services by the readers of the Lake City Reporter. John always helps us keep focused on our finance and talking about the things that are important for a more confident financial future. John, a lot of Americans, the day after we retire, don't have a whole lot of confidence that financial stability will last. And so today we're going to talk about some of the important protections that we can put in place. It's a balance, right? We need opportunity for our money and we need some protection as well.
Well, that's right, Peter. I mean, we got to have a way to make income because we're having to supplement we're now making our own income off of the money we've saved. And so it has to be safe, but at the same time, it can't be so safe that we don't make returns because we've got to keep up with inflation, Peter. And inflation, I mean, the other day, I talk on this show a lot about cost, but the other day I went down and my wife said she wanted one of those 12 packs of Coke. And I went down and at the store, they were $9.58. Now,
Wow.
I can remember it wasn't all that long ago. They were 2 for $5.
Yeah. Yeah. I actually saw somebody who had a grocery order from 2019 and then went and placed the exact same 30-item order, the exact same items in it, and it was more than double in price.
Isn't that amazing? So
Yep.
we can't afford to let our money sit on the sidelines. We have to have it working for us. But in order to do that, Peter, we have to have that financially focused income plan so we know that we have predictable, sustainable income. And just like we have car insurance and just like we have homeowners insurance, we need to have some type of insurance that covers our money while we're retired so that I can get an income.
Well, John, insurance by nature, it's like if something happens, right? And we hope that generally that event that we are insuring against never happens. We get auto insurance. We hope to never have to be in a car accident and use it. We get homeowners insurance. We hope to never have a disaster in our home where we actually have to use it. But there are certain types of insurance where it's actually beneficial. We do hope to use it. And I think a couple of those we're going to be talking about today. And another one that is kind of essential just in case is more the traditional style. In speaking of long-term care insurance there, we certainly hope to never have to use that. But when we are talking about ensuring our retirement income or the ability to transfer wealth after our death to our loved ones, our spouse, our family, those are things that we ultimately do hope to accomplish for our family, right?
That's right, Peter. We want to be able to pass on what we have to our family, but at the same time, we have to make sure that we have enough for this long retirement that we're going to be having. And, just like in 50 years, I've never had a home fire, but I still have insurance on my home because I can't afford to replace it if I lose it. Yep. And so we can't afford to replace our income, our investments after retirement because we're not working. We're not bringing in any more money. And so we have to have some way to protect and to make sure that we've got our money staggered among our buckets based upon our risk tolerance.
John, you mean you didn't just stack up cash, the equivalent of the value of your home, and stick it in the bank and then say that you're self-insured?
Well, I wish I could have done that, Peter, but unfortunately, the house has gone up in value faster than I have.
A great point. Yeah.
Yeah, there's no way I could save up that much money to replace it. Now,
even if you could, there's probably smarter ways to do it, right?
Oh, yeah. But, it'd be great if the house is worth a lot more, but how do I replace it? If if it burns down, I have to go out and buy another one. It's going to cost me just as much to get another house. And then I've got another mortgage. I'm not making money. So I've got to cover myself in retirement. I've got to make sure that I've got enough money.
Yeah. Well, again, talking about the value, the importance, the protections that we can put in place through various kinds of insurance, the need for certain types of insurance. And John, the number one question, concern, the doubt and worry of retirees in survey after survey, poll after poll shows it is running out of money. And I think that a lot of people still may not realize that you can actually insure your income in retirement, and that now is actually a fantastic time because of the market and interest rate environment to look at how to do that.
Well, that's right, Peter. With rates going up like they have, and us getting more return on our on some of our investments, fixed annuities, etc., are kind of like CDs. That the thing is that there is a way that the insurance company will give me an income every month for as long as I live, and I know that that income is coming in just like my pension. So I like to call it a private pension. I've taken my money and built me a monthly check so that I know that I have enough money coming in to meet my needs. Now, the other problem we talked about earlier was inflation. And with my growth bucket, the money that I'm investing in the market, that it will go up and down and be volatile based upon what the market does, that's my growth bucket. And so that will help me hedge inflation as I go through my retirement. A lot of people say, well, I'm gonna spend and I'm gonna live, and then I'm gonna go back to work and I'll take care of myself that way. And a lot of retirees are having to go back to work, Peter. But the thing is, we don't know if we're gonna have the health to work after we get older. And secondly, I'm going to tell you, we don't have the stamina that we can do the things. It's great to say, well, I'm going to go be the bag boy at Publix, but can I stand on my feet all day and walk out to cars? I don't know. But we got to have a better plan than that.
Yeah, and again, for retirement, John, we get one chance, one shot to have that ideal retirement. We don't want to learn from our own mistakes, or say, well, better luck next time, because we don't get a do-over. So we've got to plan ahead of time, right? This is the process of planning, staying financially focused, and getting that written retirement income plan that you offer to put together for your clients and for those who are interested in having a plan for that more confident retirement lifestyle, and the finances to support it.
Well, as they say, there are no mulligans in retirement. And as we get older, we only got one shot at it. And so we might as well try to tee it off the tee as best we can. And so that's what we do with that financially focused income plan. We're looking at Social Security. We're looking at Medicare. What's the best Medicare coverage for me to get? When should I take Social Security, and how should I take it? There are different ways to take it. How am I going to pay taxes in retirement? How am I going to be able to control some of my taxes? Taxes are going up. We know that. It's going to be a major part of our expense going forward, just like medical is going forward in retirement. And so I want to look at taxes. I want to look at all the things I've got. My investment part of it, Peter, is just one segment. It's a small segment. It used to be, when we were doing planning, we thought the investment was the biggest piece of the pie. It's really not. In my thinking, it's a piece of the pie, but it's not the whole pie. If I'm going to do holistic financial planning, then I'm going to have the best retirement I can have. Then I've got to look at all aspects of retirement, and I got to monitor that plan every year as I go forward. Because if I'm building up too much money, then I might want to take a cruise. If I'm not building up enough money, I don't want to take the cruise this year. I want to do it next year. So, those are the kind of things we got to plan in retirement.
Well, John, I'm 44. I think I'm doing the right things in moving forward and hopefully planning for a retirement. But I also realize that on the first day of retirement, I hopefully will have built up the largest amount of personal wealth that I feel can support me. But I also want to spend confidently and enjoy that money throughout the course of my retirement with my wife. And the only way I feel like in the back of my mind I'm going to be able to do that is if I provide her, if we have a tool in place that refills the bucket for her, if we spend and enjoy the money together. And that's the tool of life insurance.
That's right. Life insurance will make sure that if something happens to one of us, that the pot is filled back up. When one spouse dies, we're going to lose 40% of our income. That's the estimate on how much that one Social Security check going away is going to cost you. So we want to be able to build that back up, even in retirement, Peter. We need life insurance because there are some life insurances that we can use as chronic critical illness riders so that I can get the money now and pay for my long-term care bills, pay for my critical illness care while I'm still here and not crash the plan for my spouse.
Yeah, and we've talked about insuring your retirement income. We've
Mhm.
talked about the life insurance and the protection that that can provide. That's our last piece here, John, is those long-term care expenses, critical chronic illness kind of expenses. Those can be catastrophic if we have not specifically addressed them, formulated a plan, and there are a few different options of how to go about addressing it, but unfortunately, more often than not, people simply don't address it and leave themselves exposed to it. So can you give us some encouragement that this is something that we do need to address and then talk about the different options and strategies for how?
Well, it's certainly something we need to address, Peter. If we have assets, we're not going to qualify for Medicaid. Now, even if we took those assets and somehow moved them around and got Medicaid, the government's going to tell us where we're going to be, what facility we're going to be in, and there has to be a bed before I can go. So if everybody's full in my area, I may have to move to another part of the state to find long-term care. So it's very critical that we plan for this ahead of time. And one of the things, and as we found out in the insurance industry, Peter, you know this, that long-term care, we can't actuarially figure the cost. The insurance companies did a poor job of this back in the 90s and the early 2000s. And so now all of them are out of the market. There's no one in Florida writing long-term care insurance. And so what we have to do is find alternatives. And we can do that with life insurance and we can do that with annuities. Now, I know annuities get a bad rap. Everybody thinks that the insurance company is going to take your money, but the new annuities are good investment opportunities, are good vehicles based upon each individual situation and their risk tolerance. The insurance company is going to take your money. They're going to put it into an annuity product. We're going to be able to stay in the market, but we're not going to lose money. We're not going to get all of the market gains, but we're not going to take any of the market losses. So that's what the insurance company is telling us. And it's somewhere down the road, we can turn on a lifetime income whenever we're ready. And then in most cases, I can get 1.5 or 2 times that amount for long-term care for 5 years. So it's an alternative way for me to keep my income going. And then at the end of the 5 years, I'm going to go back to what I was getting before, getting that one check every month, and my spouse is going to get that check. And if there's any money left over at the end of the term, Peter, it is going to my heirs. The insurance company is not going to keep it. We don't annuitize these things like we used to. In the old days, I would give you my money, you would give me a check, and if I died after 10 years, the money was gone. That doesn't happen anymore. We've done away with that. It's
similar to Social Security and pensions, the way they work, right?
Yeah.
Is the income is fantastic. Everybody appreciates the income, but there's nothing remaining as like an estate or a legacy value generally if and when you pass away.
No, no, I can tell you this. I can tell you this. I know somebody that died at 65. They signed up for Social Security, got one check, and the Social Security Administration asked for it back. So, there is no guarantee we're going to get money. Whereas with the insurance company, they're going to pay our heirs whatever we put in there. That's the minimum they're going to get back.
Well, again, important protections to have in place, ladies and gentlemen. Again, we need a balance of yes, opportunity for growth and further progress, but also protections in place to protect the progress that we've already made. And certain types of insurance, John, play that role, right? For specific items or against specific events or on our very life to protect our family or pass wealth along or on the income that we plan to live off of during retirement. I think that there is a time and a place to have the conversation as you are doing your financial plan about the value and the different types of insurance.
Well, the old saying, don't put all your eggs in one basket. And we don't want to do that in retirement. We want to diversify. We want to be diversified based upon our financially focused income plan, what I'm trying to accomplish, what I'm trying to do, and how I'm going to minimize my taxes, maximize my Social Security, minimize my health costs by having the right kind of Medicare supplement, and putting all of that together. We're going to invest our assets based on our risk tolerance, and we're going to have a nice, happy retirement. And that's what it's all about, Peter.
John, you put that all together into that financially focused written retirement income plan. You offer to put that together, continue to monitor and update it, of course, along the way for clients. But if somebody does not have a plan in place or would like to review and double check their current plan, of course, the offer stands, ladies and gentlemen, for you as well. A complimentary service, no cost, no obligation to speak with John and the team from GulfCoast Financial Services. Have that review, the strategy session, the deep dive analysis into your investments and current holdings, the plan if you have one, and then help you design that financially focused written retirement income plan. If you'd like to take advantage of that, pick up the phone and give a call, 386-755-9018. Again, that's 386-755-9018. Pick up the phone and give a call, 386-755-9018. That's 386-755-9018. Or you can visit online, GulfCoastFinancial.net, GulfCoastFinancial.net. John, you also, important note here, have access to basically the spectrum of the financial world, but both sides of this balance, both the tools for opportunity and the tools for protection.
Well, that's right, Peter. We're a fiduciary. We're a registered investment advisor licensed by the state of Florida, and I have to put my client's interest first. And so we have all the tools. Nobody tells us what to show. Nobody tells us what to present to you. We look at your situation and make the best possible decision that we can make, being fully disclosing everything that you want to know about that product or that what we're trying to accomplish. And so we're real proud of that, Peter, and we want people to take advantage of it and get that financially focused income plan. Also, come by and get one of my new books. Quitting is for winners, but retirement's not for wimps. And so it's not easy to retire, Peter. And these days, it's not with the election coming up, the market doing what it's doing, all the things that we think are wrong in the world. The Saudi Arabians doing away with the dollar. All those things are impacting us. Don't get scared. Have a plan. Know where you're going.
Again, if you would like that direction, if you would like the confidence that is brought about by having a written plan in place addressing income, investments, taxes, healthcare, legacy, the protection for all of it, pick up the phone, give a call to John Kuykendall, the team from GulfCoast Financial Services, 386-755-9018. That is 386-755-9018. John, it is always a pleasure, and we always appreciate the guidance, the insight, the information and education you provide.
Thank you, Peter. Great to be here. Have a good week. We'll see you next week. Hey, if you'd like a copy of our new book, Quitting is for Winners, but Retirement's Not for Wimps, I encourage you to click the link below and get your copy today. Hey, we like it when you listen to the show, but we like it better when you like, share, subscribe, or feel free to leave a comment.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.